So Julia, shares in Ahold, the Dutch supermarket chain, are down a little bit this morning. What's happening there?
Yeah, so they've dropped off a little bit after they announced a €2 billion share buyback programme. Now investors were expecting it to be a little bit more than that because they sold their 60% stake in the Scandinavian retailer ICA recently, where they got 2.5 billion. So I think the sort of belief was that they'd get a little bit of a larger payout than that.
Well, shareholders will have to do, I guess, with what the company's giving them. What's the justification for paying back that much, and why might not they have paid back even more?
Well, I mean, to be fair, it was a compromise. So shareholders were expecting for the buyback to grow after this sale, but it does leave room over for acquisitions. So I mean, even after they've done the buyback, they should still have a sort of net debt to EBITDA position of about 1.5 times, which is well within their target threshold. And they need acquisitions at the moment because their top line growth is slowing and margins are slipping a bit as they shift more into online, and also the pressure on prices from competition.
Where might acquisitions be? We've seen lots of supermarkets trying to make acquisitions, not all successfully. So where will Ahold go?
Well, it's a good question, and obviously it's difficult to answer. They say they don't want to, or their priority at least, is to stick within the markets that they're in. So that's really the US and Europe. And adjacent markets. So, for example, in the Netherlands, they've shifted into Belgium. Although they will consider emerging markets, really the priority is not to go there, I think, because they recognise the challenges of going somewhere new.
So where does this leave investors, and how expensive are the shares?
Well, the shares have had a good run despite the sort of knockdown today. So they're now up to about 13 times this year's forecast earnings, which is actually on a par with European supermarkets. That actually seems fair, given that they're all struggling from sort of weak top-line growth, and their sort of margins are full, and from now on there's a lot of challenges for them. So at least they're back on a sort of par now with their peers.
It sounds like they might need some of that spare cash they've got now to try and boost the top-line growth if they want the share price to grow any further. Julia, thanks very much.